Good morning, everyone. Today we will have our discussion on this topic called understanding year-end compliance under GST. So today's topic coverage, we will try to have an understanding on regular books of accounts. That is what we do under Companies Act, what we do under Income Tax Act, and what we do under GST. So we'll try to have a familiar understanding what does the GST law expects from our books of accounts point of view. This will help for our GST annual returns. Also, this will help for our GST audit. Whenever we have audit under Section 65 from the department point of view, we will have a better understanding. What is that the GST officer is expecting top of what we regularly maintain. And I'll try to take you through a couple of compliances with respect to this reconciliation activity, like what all aspects what the GST officer will call when we file GST returns, what generally we do mistakes, what aspects we need to have a control with respect to the disclosure point of view. And a couple of permissions and intimations, like example, we have a letter of undertaking or a bond. So what are the regular permissions which we need to take from the GST portal? Or we need to update the GST officer. And a couple of mistakes in the journey of our reconciliation and understanding the books of accounts. When we do mistakes, what corrective action we need to do to take care of those mistakes? Then one sample checklist, I'll just show you how we can develop for our better control purpose. So this would be the agenda for today's discussion. Moving forward, first we will understand the books of accounts from the GST perspective. My books of accounts under GST starts with Section 62. Section 62. So the GST law says that any books of accounts maintained, the books of accounts should have this compliance under Section 35. Section 35. This is what it talks about. Accounts and records. Every registered person who was registered under GST shall is a compulsion, not a option given. Not a option given. Shall keep and maintain at his principal place of business, as mentioned in the certificate of registration, a true and correct account of. So they are asking us to maintain books of accounts at principal place of business, at principal place of business. So the GST law is asking us that, look, maintain your books of accounts at principal place of business. So what is the importance of this principal place of business? If you ask, the officer, the GST officer, whoever is going to conduct an audit, they come on a surprise basis. They don't come with a intimation. So there are instances where the GST officers, they come for a surprise visit. Like you have what you call inspection. Now, inspection, they have their own reasons, whether the business is being continued, whether the assessee has got the business activity done for the purpose why registration is given. Like example, say, I have taken a registration for conducting a training center. So do you have a capacity to conduct training? Do you have students to whom you're conducting training? Do you have the faculty who impart training? They try to understand your business. So that is your generally the principal place of business where you have your books of accounts retained. So the GST officer will visit to verify the books of accounts. And these books of accounts has to be maintained at the principal place. What is that they're asking? The books of accounts should be true and correct. The books of accounts should be true and correct. The books of accounts is not mere just maintain, sir, I maintain tally, I maintain purchases. That should be true and correct. That means it should match with the actual transaction. Like to take one example, sir, I have collected, say from student rupees 30,000. Now I have given a tax invoice for rupees 15,000. I have given a tax invoice for 15,000. Now they expect that there should be a correlation between what transaction you are doing and what activity has happened. When you have collected 30,000, why is that you are giving for 15,000? This is what they would be interested to examine when they come for GST audit. When they come for GST audit. So first and foremost, they are expecting us to have a true and correct. True and correct. This is more important for us to understand. The books of accounts should be true and correct. So what happens if the books of accounts are not true and correct? If the books of accounts are not true and correct, then there is a penalty. There is a penalty. Or officer will do self assessment. Sorry, they do best judgment. They apply best judgment. For what? They try to recalculate or recompute the taxes. Like example, let's say there is a construction activity. There's a builder who does a business. The builder does not maintain sale register, does not maintain purchase register. Only bank account is available. Only bank account is available. So in the bank account, you have debits, you have credits. Say credits is your receipts, debits is your payments. So the GST officer will say, whatever receipts are there, pay 12% GST. On purchases, pay 18% GST. Why? There is a reverse charge mechanism for a builder, the construction industry. So in case you fail to maintain true and correct books of accounts, then officer will try to adopt the best judgment for the purpose of assessing your computation of taxes. This is your starting point, which we need to understand. Coming further. What, as per GST law, what is that they're expecting? You maintain production and manufacture records. In case if you do a manufacturing activity, production, manufacture goods. Inward and outward supply of goods or services or both. Inward is your purchases, outward is your sale. So they're asking you to maintain true and correct account of purchases and sales. Supply of goods or services or both. Now, most of the time we see here that on the basis of bank transaction, the accounting for purchase, accounting for sale takes place. But please keep in mind, our books of accounts should be maintained on accrual basis. Books of accounts should be maintained on accrual basis. That means to say the goods which are purchased inward, the goods which are sold outward. So whenever the transaction takes place on accrual basis, I need to prepare my books of accounts. If I maintain on the basis of bank basis, then it is not a proper maintenance of books of accounts. So for all this, there are penalties under section 122 to 125, where a GST officer can levy penalty. Why penalty? They are expecting that you are supposed to maintain true and correct purchase, true and correct sale. So if you fail to maintain that, they are going to punish. Then stock of goods. Now this is little important, stock of goods. When we talk about a manufacturer, when we talk about a manufacturing activity or a trading activity, we need to maintain opening stock, purchase or production, sale or outward, then closing balance. Now, this is the basic expectation with respect to inventory. If this information is not available, again, the officer can rely upon, apply his judgment called best judgment for ascertaining the taxes to be paid. So this is his next complaint with respect to books of accounts. Manufacturing or trading, you need to maintain the inventory records. Then Input tax credit avail, output tax payable. Now, this is important. Input tax credit avail, input tax credit avail, input tax credit avail. Now, here we have section 16, which talks about your input tax compliances. Like we have conditions. What is input tax credit? When I can take the input tax credit? What are the associate terms and conditions? So whenever the GST officer calls for an audit, they ask, give me the purchase register. Give me the purchase register. Along with that, what is the ITC avail? ITC avail. So here they would be asking, what is the name of your supplier? What is the GST of your supplier? What is the nature? Is it goods? Is it services? What is the HSN? Then what is the basic value? What is the GST breakup for that? And date of payment with respect to the purchases what you have done. Input tax credit avail. So whatever input tax credit you have availed, this entire information they are going to ask you to provide whenever there is a GST audit. So when, like why this is being called for, there's a complaints under section 16. So the GST officer will expect, like there is a complaints called section 16, subsection 2, clause AA. That means to say, when you avail input tax credit, the input tax credit should be communicated, This is a complaint as per section 16, subsection 2, clause AA. What does that mean? What does that mean? The GST law says that, see, when you want to claim input tax credit, that input tax credit should have been communicated. Let's take example. So there is a seller called ABC Limited, ABC Limited. So here, this seller has to file GSTR 1. On the basis of GSTR 1, this data travels to GSTR 2B. Only when the credit is available in GSTR 2B, this credit I can claim in GSTR 3B. I can claim in GSTR 3B. So this is what the officer will examine when they call for your verification of books of accounts. Similarly, there is something called output tax. Under section 35, the next item is your output tax payable, output tax paid. Now, this is where the GST again is expecting that for a particular tax period, what is your GST payable? And what is your GST paid? I would say GST paid. How? Paid to credit, paid through cash ledger. Now, credit, when we say, now I could have this way. Credit available in books, available in 2B. Credit available. Now, without accounting in the books, if credit is available in 2B, I cannot enjoy the credit. Accounting is done, but not available in 2B, I cannot claim input tax credit. I have accounted in books, it is also available in 2B, then I can claim the input tax credit. So again, the GST officer will be concerned with these scenarios where when they do an audit, have you accounted? Is it available? Have you accounted? Is it available? If both the conditions, like no, this is where we can take the input tax credit. So this is where the audit, when they do, they check which month you have accounted, which month it came into B, and how much credit you have taken. Because this is connected with your payment of output tax. Under section 49, they talk about your payment of tax. So this is again expected from the GST law that you maintain proper books of accounts. So part of that, what is the credit you have to pay? What is output tax you have to pay? And what is the output tax you have actually paid? Next, such other particulars as may be prescribed. Now here, this is an ancillary thing. For this, Rule 56 has been brought into GST law to explain what all other details are required. Like example, when I talk about input tax credit, they say name of the vendor, address of the vendor, then GSTN of the vendor. So these are the details which are there under Rule 56, which when they call for audit under Section 65, they ask us to provide. So please don't think that GST officer is asking multiple things. No, what is prescribed under the law, this is what they're asking us to provide for verification purpose. Then provide, this is something which the GST officer is asking us. Now, okay. So first and foremost, what we have done, we have understood the expectation, the GST law is kept on a particular register person. So first and foremost, as a register person, our duty is to maintain books of accounts. So where do I maintain these books of accounts? I have to maintain at the principal place of business. So this particular maintenance, if I don't do, then there are penal provisions which are there under GST law. There are penal provisions which are there under GST law. We need to also understand that, sir, as a business, I have principal place of business. I have additional place of business. Like, let's take an example. Sir, I have Jayanagar, 5th block, where my principal place of business exists. Then this additional place of business, say it is there in RT Nagar. Also RR Nagar. So I have 1, 2 additional places of business. Now, what I do, let's assume that I am conducting a training activity. So this being a corporate office, I need to maintain books of accounts pertain to RT Nagar, pertain to Rajarashwari Nagar. What do I maintain? Like nature of business, training activity. So what is required for this particular training activity? So I need infrastructure. That means to say, I need to have the tables, chair, mic, the electronic gadgets, then the board, smart board, etc. These are the things which are required. Now, with respect to billing, I can have a billing done at principal place of business, or I can do at additional place of business. So this being a service activity, I just conduct classes over here. But whoever student comes for registration, they have to come to our corporate office, which is the principal place of business. So here, so since there is only service, which the training which gets rendered, I don't maintain any books of accounts at these 2 locations. So this being a service industry, this is how we need to understand nature of business and where I have to maintain my books of accounts. This is my starting point. So moving from books of accounts, now let's understand what is next level, which is expected. Like, so I have maintained books of accounts. What does the GST law expects me to do further? So with respect to this books of accounts, now comes your reconciliation activity. Comes your reconciliation activity. This reconciliation starts or is mandated as per Section 44. Now, I'll just elaborate this. This Section 44 talks about your annual return. As of today, we have GSTR 9, which is called annual return, and reconciliation statement, GSTR 9C. I call this as a reconciliation statement. What does the GST law expects? Like, as per 35, maintain books of accounts. Now it says that every registered person other than ISD or person paying tax under TCS or TDS or TCS, casual taxable person, NRTP, shall is a compulsion, shall furnish an annual return which may include a self-certified reconciliation statement. This 9 may include 9C also. For what? Reconciling. Value of supplies declared in the return furnished for the financial year. They're saying that reconcile the value of supplies. So when they say value of supplies, this value of supplies could be, my value of supplies could be purchase, could be sale. So what they're asking, reconcile the value of supplies declared in the return furnished for the financial year with the audited financial statements for every financial year. So they are asking us to reconcile this purchase and sale, which is filed under section 39. That is your GSTR 3B. The law is expecting that, look, you have your purchase and sale, which was already declared in GSTR 3B. You match or you reconcile with what? With audited annual financial statement. Audited annual financial statements. Reconcile with audited financial statement. So my financial statements includes balance sheet, P&L account, notes to accounts. Please understand, my notes to accounts is nothing but a disclosure. Disclosure with respect to preparation of balance sheet, preparation of P&L. It may also include cash flow statement. So the GST officer is expecting that whatever you have done for 12 months or 4 quarters, if assessee is there who's filing a quarterly return, either quarterly return or monthly return, whatever you have done for 12 months, reconcile that particular transaction with your audited financial statements. For what? Both purchase and sale. That means to say, your input tax credit, your output tax credit. Your input tax credit and output tax, what you have paid under section 49 should match with my audited financial statements. So this is the next level of expectation which was set by the GST on a registered person. So first we understood books of accounts. Then the law says that from your books of accounts, at the end of year, I travel to understand what all returns you have filed, is it correct or not? Now, assuming for a moment, as per your, I call this 12 months data. This 12 months data travels to form GSTR 9. My GSTR 3B becomes an input. It is an input for GSTR 9. In case if there is a difference between GSTR 3B and GSTR 9. The difference is I need to explain through GSTR 9C. GSTR 9C. This is what they are asking us to do with respect to annual returns. Now, sir, we have maintained books of accounts. Point number 1, we have maintained books of accounts. Point number 2, file GST annual returns. In spite of this, audit under section 65. Is it compulsory? Now that, like, why does a GST officer again call for books of accounts verification? Answer is to review the self-assessment. To review the self-assessment, audit under Section 65 is a option available to the GST officer. So on the basis of a direction of a commissioner, this audit under 65 can be taken up. Audit can be taken up. So this is on a random basis to verify whether your compliances are proper or not. They try to call for an audit. So coming back to your annual return, the law is expecting that whatever returns you file, every year, every financial year, you get your annual returns file, which matches with your audited financial statements. And there's a time limit within which this particular GSTR9 has to be filed. Now, from here, let us just have a overlook of our financial statements. Now, I just copied a balance sheet for us to understand, then profit and loss account for us to understand. From here, we get on to the detailed reconciliation activity, which we will do at the end of the year. Now, balance sheet. Now, this is how typically our balance sheet looks like. We have reserves and surplus. This is where the gap between these two items is your profit or loss. Profit or loss. Now, this is nothing but your value addition, where the GST would be getting revenue. So I purchased for 100 rupees, I sold for 110 rupees. The 10 rupees is nothing but my profit. This profit comes and sits in my reserves and surplus account. So when you look from the GST auditor, GST officer's point of view, when a manufacturer, when a trader purchases, they have purchased 100 rupees worth item. They manufactured and sold it for 120. So the gap of 20 is nothing but my value addition. That's my profit. On 20 rupees, I would pay GST to the GST office in cash ledger. Probably that may not be in cash ledger for the reason, sir, inverted duty structure. I buy at 18%, I sell at 5%. So you'll not see anywhere your cash ledger. Or probably, sir, I buy for 100 rupees, I sell for 101 rupees. That 1 rupee is my margin. I'm a wholesale trader. So always, sir, I would have 3 months closing stock for purpose of inventory. So never this particular wholesaler who have a very thin margin, they would be paying any GST to the GST officer. So this is where we need to focus how the data will be reviewed upon. Reserves and surplus. Then current liabilities. Like we have obligations with respect to the loan availed, the trade payable. This is one more item where the GST officer would be focused upon. Trade payables. When you look at trade payables, section 16, subsection 2, any vendor you buy goods or services, within 180 days, I need to pay the supplier for the basic value plus GST, which is nothing but my total invoice value. So with respect to this particular sundry creditors, trade payables, which are available as on 31st March 24, they'll ask you, whatever is the closing balance, give me the breakup. And for this, give me the date of payment. If you have paid within 180 days, I'll allow the credit for you as an input tax credit. Why? Because of section 16. So here we are trying to understand our balance sheet from the GST officer's point of view, what they would be interested to call for or look for. Then moving further, trade payables, then other current liability. Now this other current liability is where, suppose if I have advances, let's take example. Say I'm a hotel, I'm into hospitality business, I'm into manpower consultancy, I'm into training activity. So a student pays me 1 lakh advance. Like we are in March, suppose the course is going to get started from April. So student pays me 1 lakh advance. So that money 1 lakh, I'll not call as an income. Reason, this event is yet to start. Since April is classes going to start, only when the classes are going to start, I'll book that 1 lakh as a income. So that money received in advance, I'll be putting under the head called other current liability. So this is where, again, if there are services as per section 13, time of supply, even on advances, I need to pay GST. So any advances which I have grouped under this particular schedule, the GST officer will be verifying whether the advances have been considered for GST payment. GST payment. Then short-term provisions, not much. This is only accrual point of view. Then assets. Again, what is the interest from the GST books of accounts point of view? Whenever we have fixed assets, now section 16, subsection 3, where depreciation, GST. If you want to claim depreciation benefit, no input tax credit on the GST portion. If you want to avail input tax credit, don't add the GST to the cost of asset for claiming depreciation. To give an example, I buy a asset for 1 lakh. My GST, what I have paid is 18,000. I have option one. I'll claim depreciation on 1,18,000. Option 2, I'll claim depreciation only on 1 lakh. I'll claim ITC on 18,000. Because you are claiming depreciation on entire 1,18,000, no input tax credit is allowed in this particular option 1. In option 2, because only on 1 lakh you are claiming depreciation, we can claim input tax credit on 18,000. Now, this is where, again, complaints under section 16, the GST officer will be asking. What he will do? This is your opening balance. This is your closing balance. What is the gap between these two? That means, what is that you have purchased? What is that you have sold? So what all purchases you have done? What is the purchase value? What is the GST? What is the total value? Do you want, have you claimed depreciation on 1,18,000 or you have claimed depreciation only on 1 lakh? So purchases they would like to review. Apart from that, complaints under section 16, whether you are eligible to claim input tax credit, they will verify. Option number, second purpose, sales. Whenever there is a sale of fixed assets, section 18 comes into picture. What is the life of asset? If the life of asset is less than 5 years, whether have you reversed your input tax credit? This is first agenda why the officer will call for breakup of your fixed assets. Second, with respect to sales, on the transaction value, whether GST has been paid. This is what they're going to ask for. So when we look at assets, our purpose is from compilation of the asset depreciation. But the GST officer, they're going to verify whether this input tax credit, output tax payment have been dealt properly or not. This is the agenda for a GST authority. Then moving further, intangible assets. On intangible assets, like we have, say, patent or trademark or some other activity. What was your opening balance? What was your closing balance? Why there is a increase or decrease? Whether there is an increase, whether you have claimed input tax credit. If there is a decrease, is it on account of amortization or have you sold this particular license? They would be interested to verify your intangible asset also. Then moving further, non-current investment. This is where, if you look at this item, my opening balance, closing balance remains the same. Like example, investment in shares or securities. So whenever there's an investment in security, the sale of security is considered as exempt supply exempt supply under section 17. 1% of the sale value is considered as your consideration. So for the purpose of this rule 42 or rule 43, they would be calling for this non-current investment. What is your opening balance? What was your closing balance? You purchased anything? You sold anything? If you have sold anything, whether you have reversed your input tax credit, they would be asking us to provide this information again. So this is what they would be looking for. Then other non-current assets, not much. Current assets, trade receivable, cash bank balance, short-term, other current assets. Here we don't have inventory. In case if inventory is there, in case of inventory, your section 17, if there is any write-off, if there is any no scrap loss, I would say loss of inventory, whether you have reversed input tax credit. For the purpose of that, they would be calling for your breakup of inventory from your balance sheet. Similarly, when we look into a profit and loss account, now this is where my purchases, my sales, inward and outward, what we saw in section 35 starts with. So now revenue from operations, other income. This breakup, they try to match with your GSTR 3B. They try to match with your what you call exempt income, and see whether both matches. If there is any gap, whether this gap has been explained in GSTR 9 or 9C. This is what they expect with respect to sales. With respect to purchases, little more from your tax audit point of view. Yeah. I'll come to tax audit. In tax audit, when we file our income tax return under Form 3CD, which is certified by a chartered accountant, there's a clause called clause number 44, where income tax authority is asking us to furnish, when we file IT return, breakup of total expenditure. What you're seeing here in the P&L account, my cost of raw material, my purchases, then employee benefits, then finance, this one, other expenses. Out of these head of accounts, what is your total expenditure, which is from a registered person or which is from a non-registered person? So they want you to explain what is the total expenditure for the financial year on the debit side of P&L account from goods and services which are exempt, which are from a composition dealer, which are from a registered person, and total payment to a registered person. Now, these heads of accounts is verified as per GSTR 2B. Now, this is a big activity for companies and the professionals when we maintain books of accounts. So our intention is to understand what is there in my books, what is there as per GSTR 2B. This we need to have a proper reconciliation. So please understand that whenever we talk about GST compliance, this is how maintenance of books of accounts. From maintenance of books of accounts, you have annual returns. For annual returns, reconciliation comes into picture. So please keep in mind, there are various sources where the information travels to the GST officer. So this is your reconciliation, why we were talking with respect to year-end compliances. Now, let me see if anything, yeah. So this is a starting point at the end of the year, like we are in March. We will start working upon. Reason, my GST officer or my chartered accountant who certifies my books of accounts is going to ask me, Praveen, what is your turnover for 11 months shown in the GST returns? What is the turnover for 12th month? What is the turnover shown in the books for 11 months? If there is any gap, what I'll do in the respect of March. So this March is a crucial where I'll just put it over here. GSTR 3B, month 1, so on till month 11. month 12. Books month 1 till month 12. In case if I compare till this with this, my books vis-a-vis GST returns. Please understand, books is my base. In case if there are any mistake, in case if there is any non-reporting of either sales or purchase for these 11 months, my golden period, month 12, which acts as a base to do all those corrections. Sir, I forgot to disclose sales reported to a B2C transaction. Don't worry, come to your month 12. As for books of accounts, you have a YTD figure, year till date figure. You compare this 11 months, any corrections to be done, use month 12 as a correction point so that the window, you never have this reconciliation issue when you file GST returns with respect to say turnover. Whatever turnover you have in your books of accounts to match with your GST 3B, your month 12, that is your March month, is very crucial for us. Similarly, with respect to purchases, I'll explain you in detail how these purchases we try to reconcile. In case if there is any gap in our purchases, those purchases also I can use month 12 for disclosure, reporting, or payment of tax or payment of tax. This is what we need to understand. So just to recap, we have understood books of accounts, which are expected under GST. We have understood the purpose of reconciliation under section 64. And we have understood how this information is examined from financial statements. We have examined from P&L, balance sheet, notes to accounts. Here I have not brought notes to accounts, but that is also data which will be verified by the GST officer. So this data we will try to disclose in case if any information which is missing in month 12, that is March return, March tax period. For all sort of corrections, turnover not disclosed, turnover excess reported, purchases underreported, input tax to be reversed but not reversed. All that we will do adjustment in my March tax period. This is what we need to understand. Now we'll move on to the very, very important aspect called reconciliation. So what is that? What is that? Like, when we talk about reconciliation, what is the GST law expects and how we can maintain our books of accounts to reach that proper disclosure aspects. So starting point, let's understand from purchases point of view. Purchases point of view, what is the clarity I need to have from books of accounts? So as a taxpayer, as a chartered accountant, as a cost accountant, as a GST officer, what is that I need to understand? What is that I need to review? So first and foremost, point number A, books of accounts. Books of accounts. So from books of accounts, what is that we need to do? First and foremost, whether you have a bifurcation of goods, services, and capital goods. That means to say, when I do my accounting, do I have information with respect to goods, services, capital goods? Now, example, purchase of consumables, purchase of rent, purchase of consultancy fee, purchase of capital goods, purchase of machinery. Now, each item has got a specific reason. Like, let's take an example. Say, Rule 42, 43 compliance. Now, with respect to Rule 42, I would predominantly look for services. For Rule 43, I look for capital goods. Example, when we think of this, let's take example of a construction business. In case of my construction business, there is a thumb rule that my purchases should be 80% from a registered person. If I don't have purchases from a registered person to the extent of 80%, the shortfall, I need to pay tax under reverse charge mechanism. That is one particular norm. Second example, exempt supply. Exempt supply. Whenever there is an exempt supply, ITC reversal under Rule 42. For Rule 42, I need to do this on common services. I need to do on common services. So what we need to know, whatever purchases we have done, are we in a position to identify, goods, services, capital goods. So if there are common services, on those common services, I'll apply Rule 42. With respect to goods purchase, I travel to the RCM notification 13, read with notification 6. If at all, if I have paid 80% GST on my unregistered purchases. Similarly, further, second point, purchases booked vis-a-vis GST goods in transit. Purchases what are accounted, purchases which are there in transit, I'll explain this. Let me just come to the Word document. Okay, 11:34. Asha, I saw your message just now. What is that you have asked me to repeat, Asha? Sorry, I didn't saw your message. You can type what you want me to repeat. I'll just repeat that, Asha. Now, let us understand. Okay. Purchases and goods in transit. Purchases and goods in transit. Now, 31st March 2026 is a crucial thing for me. I have raw material in store. I have raw material, I would say in transit. Raw material in transit. That means to say raw material in store, received and available for consumption. Raw material in transit, only a provision is made. Stock is not available. Stock is not available. Why we talk about this raw material is, as per section 16, subsection 2, goods or services to be received to avail input tax credit. My goods and services to be received to avail input tax credit. So what is in transit? I just make a provision. Have you received this goods? Answer is no. So till you receive those goods, you cannot claim input tax credit. So if I take one example for this goods in transit, so there is an import purchase. My goods, import goods, have reached customs on 28th March 2026. I pay customs duty on, say, 30th March 2026. I file bill of entry on 31st March 2026. I receive goods on 2nd April 2026. Assuming that whatever customs duty I paid IGST for 2 lakh. So the question comes here is this input tax credit of rupees 2 lakhs, March 26, April 26. March 26, I have paid, but actually April 26 is where I have received these goods. Now, here the question comes is, availment happens in April 26 because as per section 16(2)(b), I have received the goods only in the month of April 26. If at all, in GSTR 2B, GSTR 2B is updated in March 26, I avail this credit only in April 26. So what I'll do as on 31st March, as on 31st March 2026, I call this import purchase as goods in transit, as goods in transit. Now, this is again one reconciliation item which we need to keep in mind. Goods accounted, goods provision made. This is important. Coming back to reconciliation activity. Next. Inward supplies. B we have discussed. Then C. Inward supplies which are either exempt, purchase from composition dealer, or taxable. Now please understand this for clause 44 of income 3CD of income tax. So when I file my income tax return, my tax auditor has to certify. He has to give me the breakup of, you remember this class 44. Form 3CD, breakup of total expenditure of entries registered or not registered under GST. I need to give breakup of exempt purchases, composition dealer purchases, registered dealer purchases. So for this purpose, do I have my books of accounts properly maintained with respect to this import purchases? So here I have separate one Excel file where I'll explain on chart of accounts. I'll just come to my chart of accounts. So multinational companies, they have this compliance properly taken care with proper chart of accounts. Now, what do you mean by chart of accounts? Chart of accounts describe what to be accounted and where to be accounted. So this is a no base for any company how to account. Like example, sir, I have received a bill. Bill says that this is the money to be paid for rental activity. Now, money to be paid for rent. Rent, is it an expense? Rent, is it an advance? So what to be accounted? Rent. I ask a question, I get an answer, rent. Then way to account. Rent, it is for current month. I'll account in P&L. Rent, it is in advance for the future period. Then I account in my balance sheet. So this is where my chart of accounts comes to explain chart of account explains what needs to be done. So I just gave an example, like say for our liabilities, for balance sheet item, liability, say it starts from 100,012 to 1,999. So anything over here will be liability. Subclassification. So within liability, I have share capital. So 100 series, 100 say 1100 series. Now I use this for share capital. From again 10,000, I have said 200 series. I use for borrowings. Borrowings from a bank, borrowings from any other party. Similarly, internal borrowings, like borrowings from the director, borrowings from the shareholder, borrowings from the sister company, etc. Then trade payables, it comes into say another account. Government statutory dues, EPF, ESI, TDS, GST, all those things comes under sub account at 500. Provisions and accruals 600. So likewise, if you understand, this will help you how to maintain my books of accounts to make a clarity with respect to this clause number C. Clause number C. I'll just explain one classification how this accounting can be achieved. If I come to my chart of accounts, let's see 24 I'm using is for 2 series. Okay, say liability. Now assuming I need to maintain or maybe input tax credit. Example for money due from government or statutory authorities. Let's assume that if it is a current asset, how do I record my current asset? For current asset, my requirement is money due from government or statutory authorities. This is one particular balance sheet item. Now, how can I have GL coding? So input tax credit. My input tax credit, IGST, CGST, SGST. I have this GL code. Similarly, input tax credit on account of ISD. I have 24032, 24004, TDS receivable from income tax authority. TDS receivable from income tax authority. Similarly, TDS or TCS, when I supply to government company, the government company deducts TDS 1%, 1 plus 1, 2%, or TCS 0.5%, 0.5%. So when I account for that, these are the GL code. TCS receivable under income tax. Again, this is a code. Advanced tax, this is a code. IGST, CGST, SGST, PLA deposit, cash ledger. So in my balance sheet, in my current assets, this is the GL code. I use it for that. And in case if I have a money refund, so I file a refund application, I need to get a refund from the GST authority. I use these particular GL codes. Then input tax credit of GST on reverse charge mechanism. Again, I have a different GL code. Say subsidy, I have to earn subsidy from the state government, subsidy from the central government. These are the GL codes. So here, what we understand is that planning. Now, to have a better disclosure, like this, to achieve clarity in my books of accounts, I need to have a proper chart of accounts. So I'll just mention over here, chart of accounts. My chart of accounts will help me to design and identify the information for internal reporting, say for MIS purpose, external reporting, maybe for income tax, maybe for GST, maybe for banks, maybe for any other statutory authorities. So I should understand what is my purpose. If I understand my purpose, chart of accounts is going to help me to have a better presentation of my books of accounts. So we have understood clause C. Then we will move on to clause D. My purchases, supplies on which ITC is available and availed, vis-a-vis ITC not availed. ITC available and availed compared to ITC not availed. Now, clause D is again asking me to reconcile input tax credit available, which is availed, which is not availed. Now, this I have to know. Sir, ITC is available and availed. There is no issue. ITC available but not availed. Why you have not availed? Sir, maybe this is a block credit. Or, sir, maybe as per section 16, subsection 2, some complaints are pending. Or there is a clarity required whether to avail or not. What I will do, I'll park in my 4B2 in GSTI 3B, which goes and sits in your electronic credit ledger reclaimable statement. Now, this is where proper bifurcation of input tax credit has to be maintained. Take example, construction company. So when I do construction, I don't know whether I'll sell my apartments before occupancy certificate, after occupancy certificate. So when I have received the input tax credit, I don't know whether I use this input tax credit for taxable activity or for exempted activity. Now, lack of clarity, I may avail, I may not avail. So this particular activity, I need to have a reconciliation. I need to have a reconciliation. I'll just show you one Excel file where we maintain this reconciliation. Now, this is just an internal document which we use for monthly reconciliation activity. Hope Excel file is visible, everyone? Okay. So here we are trying to start with the input tax credit as per books. Input tax credit available as per books. This is my starting point. For this input tax as per books, I'm going to add something. I'm going to deduct something from the books to derive with your form GSTI 2B. That means to say, my government officer is going to ask, Praveen, 1 lakh IGST credit is there in GSTI 2B, but you have availed only 40,000 or you have availed 1,20,000. I'll explain this. Let me take my GST here. Say for let's assume April 25 IGST. ITC as per GSTR 2B is 1 lakh. ITC as per GSTR 3B, say 1,20,000. This is scenario 1. Scenario 2, 1 lakh is available. I have claimed only 80,000. So here, officer would be asked, why did you claim 80,000 excess? This is a rule 88D where you get an automatic notice. Every month, when you file your GST returns, if a credit in GSTI 3B is above GSTI 2B, you get a notice from the GST department as per rule 88D, 88C. If turnover mismatch, 88C. If input tax credit mismatch, 88D. Or the officer may be asking, see, when you have 1 lakh, why you have short claim 20,000? Even this may be questioned. So to justify this particular gap, we maintain one reconciliation, which is helpful. So we are saying that, sir, as per books, I have say 1 crore, 15 lakh, 30,000 credit. What is the gap? Add purchases not accounted in the books, but reflecting in GSTI to be, say to the extent of 31 lakhs. You can see my GSTI to be has a credit of 31 lakhs. I have it to be accounted. Why have you not accounted? Sir, invoice Barlilla, goods Bandilla. I don't know the party, whether he is my vendor or not. Various reasons are there. I have not claimed the credit. Similarly, less. Purchases not reflecting in current month GST had to be. My book says that around 67,000, 1,500 I have accounted, but vendor defaulted in filing his returns. ITC appearing in 2B of previous month, accounted in current month. Similarly, sir, my books in the previous month, the credit came and appeared like import of goods. 35 lakhs was appearing in the last month, which I have accounted in the current month. So I'm adding back this, which is not there in 2B, or I'm deducting in the books account. I match with GSTR 2B. This is a reconciliation what I'm trying to do. So this is what we need to do with respect to your input tax credit. Supplies on which ITC is available and availed, or ITC is not available. So this is something every month we need to do. Reason, now, like since there is a pressure from the state government or central government on the GST officers, instead of waiting for 12 months, every month they are calling for verification. Why? There is a mismatch. Similarly, supplies on which, clause E, supplies on which tax is payable under reverse charge mechanism. Notes to accounts, related party transaction, 13, separate GL for reverse charge mechanism. Okay. So as we know, there are expenses on which we pay tax under forward charge, expenses on which tax we paid under reverse charge. Expense on which GST is payable under reverse charge mechanism. One classic example, we have somewhere in 2024 October, this reverse charge mechanism on rent was brought in. What do they say? If the landlord, related party transaction, I'll explain that. Reverse charge mechanism, rent. All of a sudden, government said that, look, you're paying rent for your business activity. If your business is taxable, you're registered under GST, but your landlord is not registered under GST. You pay tax under reverse charge. If you're eligible, claim. If you're not eligible, you ignore that particular input tax credit. The GST officers started sending notices right from 2025, somewhere April till October, saying that, look, whether there are expenses on which you have to pay tax, have you paid? If you have not paid, why not paid? So this is an activity which officers are calling for. Now, what is there for us to understand? When we account for expense, we need to have a clarity. Expenses which are under forward charge, expenses which are under reverse charge mechanism. Like example, the rent. Now, rent where my landlord charges under forward charge, rent on which I pay under reverse charge. So let's take a small example. Sir, I have I'll put it this way. Sir, I have my corporate office where landlord pays under forward charge. I have my branch office saying this is in Bangalore. My branch office, say Hubli, I'll say UBL, Hubli, where this branch office is landlord is not paying any GST. So I have to pay tax under reverse charge mechanism. I also have, say, residential for director, where landlord is not paying any GST under forward charge. Then company has to pay tax under reverse charge. So what is that we need to do? Whenever I account for rent, I need to have 2 GL. Rent for FCM, rent RCM. So this is one GL, this is another GL we need to maintain. When I have clarity in my this rent account, then it is easy for the GST officer, it is easy for you also to explain. So this GL, whatever is there, rent RCM, this will match with your GST returns. So when I go to GST I3B in table 3, there is a clause D where I'll say these are all expenses on which I paid tax under reverse charge. So which expenses I may need to use this rent, I'll put it this way. You have advocate, you have GTA or transport, you have rent a cab services, where there is a forward charge, there is a reverse charge, then there is a rent. Confusion usually will be there in GTA, rent a cab, then a rent for commercial or residential.
Security charges.
Yeah, the Shiva?
Security charges.
Security, perfect. Yeah, security charges. So what is paid under forward charge? What is paid under reverse charge? Better to have two GL separately. Two GL separately. This is with respect to reverse charge mechanism. Now, we'll move on to the, what I can say, this one, related party transaction now. Little important, related party transaction. Related party. With respect to related party, section 15, which talks about valuation. Read with schedule 1, which talks about supply without consideration. Without consideration. Supply without a consideration. Now, usually in my financial statements, I have notes to accounts. I have notes to accounts as per accounting standard 18. Disclosure of all related party transactions is compulsory. Disclosure of all related party transactions is compulsory. So I'll give one example for us to understand. Assuming that there is a parent company in Japan. There is a subsidiary in India. Say there is a employee of parent company. There is an employee of parent company. He visits India for business purpose. Maybe this business purpose is for parent company, maybe for subsidiary company. We don't know. So when he visits India, let's assume that local travel, expenses on account of local travel, accommodation, hotel stay and food expenses, etc. Rent a cab service. Then other miscellaneous. Now these all are spent by Indian entity. Indian company spends these expenses. Say, let's assume that around 5 lakh rupees was spent. Rupees 5 lakhs was spent. Assuming, just for a conversion point of view, assuming it comes to around, say, 8 lakh Japanese yen, JPY 8 lakh. Now, this Indian company raises a debit note on the parent company. Now, this particular 5 lakh will never hit to P&L, not hit to P&L. Rather, it will be a balance sheet item as current asset. receivable. And once I receive money, this goes into my bank account. This goes into my bank account. So, just to understand, like brother and sister. Now, when a sister comes to meet brother, what all expenses are incurred? Generally, they may claim, they may not claim. In case of a related party transaction, also works like this. I've spent 5 lakhs. So this Indian company draws 5 lakhs from the sister company by issuance of a debit note. Now, this particular transaction, by virtue of this accounting standard 18, it gets disclosed in my notes to accounts. Notes to accounts. Now, as per Schedule 1, they say that though there is no consideration, it is to be considered as a supply. It is to be considered as a supply. That means to say, the Indian entity has to raise or issue a tax invoice on parent company. Now, what is the consideration? This 5 lakhs, whatever they have spent on, this becomes a quantification. This becomes a quantification. That is your value of supply. Value of supply. We need to refer to section 12 or section 13 of IGST Act to identify place of supply. My understanding, as per me, section 12, the place where these services are provided will be the place of supply, where CGST, SGST has to be charged. We're not talking about valuation, but let's keep in mind, whenever we present our books of accounts to income tax, to GST officer, income tax, they wanted to understand whether to allow that as an expense or disallow, whether to bring that as an income for charging income tax or not. GST officer's point of view, they read that notes to accounts, they understand related party transaction, whether GST was paid. If GST is not paid, why it is not paid? So this would be the interest. This would be the interest with respect to my expenses under reverse charge. Supplies on which tax is payable and reverse charge or transactions with respect to related party transaction. I explained one of the transaction where I bill to the parent company. Similarly, I would have money spent where my related party is giving me a support. So here, their employee travel to India, my employee traveling overseas. In those cases, Section 13 comes to play with respect to place of supply. So what we need to understand again here is whenever RCM is paid, GST paid on reverse charge mechanism, look into expenses domestic. Similarly, expense I would say foreign currency, which forms parts of your notes to accounts as per AS 18. These both to be considered for payment. These both to be considered for RCM. This is what we need to understand with respect to reconciliation activity. See, you may feel that why is that we are focusing so much? Now, income tax officer, GST officer, chartered accountant, all three have the same purpose. Like when they certify, when they issue an order, when they pass an order, they're expected to verify, they are expected to confirm that you have complied with the law. It's like a certificate, right? So everyone has to do their job properly. For this, again, your chart of accounts comes into picture. Then clause F with respect to construction. For construction, what is my registered dealer purchases? What is my unregistered dealer purchases? So there is a notification 9 of 2019 where if my purchase is falling 80% of the registered purchases for a particular financial year, In case of a construction business, I need to maintain. Please keep in mind this, we have to maintain project specific. I have to keep a track. What is that I have purchased from a registered dealer? What is that I have purchased from an unregistered dealer? Now, how do I do this? Now, this construction, whenever there is an audit done, I have P&L, which is consolidated. This consolidated needs to split into project 1, project 2, project 3, where I have income, I have expense also. This project wise, when I have expense, this expense I need to again break up registered, unregistered. With respect to unregistered, your notification 9 of 2019, whether I have paid tax under reverse charge, where there is a shortfall, So here, how we will get this clarity is we get into this chart of accounts. When I consolidate, like in a construction business, how it will happen. Like let's take example, say Purvankara, Brigade, etc. I'll just come to the Word document. In case of construction, I have to review P&L account. This P&L account will have my income, expense. So here we need to have project 1, project 2, project 3, income, project 1, project 2, project 3. In case of expenses, in case of raw material, opening stock, your purchases, your closing stock gives your consumption, COGS, then direct expenses, your direct wages or direct labor, other expenses. Now, this is where I have to maintain a track for notification 9 of 2019. So while accounting itself, they would have defined like, whatever projects they have. For those projects, what is your total expenses? My every financial year, assuming registered purchase divided by total purchase. If I get a result 80% and above, greater than equal to 80%, you are compliant in law. If this fails, then reverse charge mechanism comes into picture. This is what, again, the chartered accountant certifies, even the GST officer verify with respect to expenses. With respect to income, now what is works contract with GST? Then what is in supply? Schedule 3 item, that is your immobile property. I'll just show one P&L account, how we have bifurcated income, just to have a clarity. This is one client where we maintain the sales data. Assuming that when someone asks, what is your turnover? My total turnover is 7 crore 41 lakh 5,000. This is for a particular month. So in a particular month, my turnover is 7 crore 41 lakhs. But this is not for one state alone. Like if you see here, I have Delhi, Haryana 2, 3, 4, 5, 6. 6 states, I have a turnover which totals to 7 crore 41 lakhs. Now, state-wise, if I see, let's assume Haryana. I have Amazon B2B, Amazon B2C, direct order Haryana B2B, direct order B2C, then shipping charges like 12%, 18%, stock transfer within the company, then training income, website B2C, website B2B. Now, this is how I have an income breakup with respect to each state. So this is one example where whatever be your business, we should be in a position to break up and say So these are the heads of income under which I get my income. So with respect to your immovable property, like when we talk about income, we should be in a position to identify project-wise income and whether it is subject to GST or it is a Schedule 3 transaction. This is little, knowledge backed area. Not everyone can understand how the accounting is done in case of a construction industry. Coming back, track for project specific raw material, finished goods, and other inputs. Now, this is the purchases what we need to maintain from books of accounts. Then, external reconciliation based on the purchases from your books of accounts. What is the reconciliation I do? I do reconciliation with GST to be where I showed you Excel. What is as per books, what is as per GST to be. So this particular reconciliation I have to do state-wise, then project-wise in case of a construction. Then availability of e-invoice for specified inward supplies as per Rule 48, Sub-Rule 4. E-invoice. Please keep in mind, wherever a supplier whose turnover is more than 5 crore, they are supposed to give an invoice called e-invoice. Any invoice which is not an e-invoice, it is not to be considered as an invoice. Let's take an example. Say XYZ Limited has a turnover of 100 CR. By default, this entity should give a e-invoice. The moment I say e-invoice, this will have a QR code. This will also have a IRN, which is 54 digits length printed on an invoice. For a moment, if he gives a ordinary invoice, then Rule 48 says that, Rule 48.4 says that, no, this is not an invoice. Whatever invoice they say is not an invoice. If it is not an invoice, as per Rule 36, no input tax credit. Now, who is going to lose here? I, as a buyer, because of a default made by the supplier, I may lose a credit. So what is that I have to do? Whenever we have GST at 2B, in GST at 2B, you have IRN details. Just filter the supplier wise where there is no IRN. This particular data, you can check on e-invoice portal, whether if you put the GST number, whether e-invoice is enabled, not enabled. If e-invoice is not enabled, I'm safe. If e-invoice is enabled, but vendor is not giving this IRN, if vendor is not giving IRN, no input tax credit. This is your external reconciliation. That means, so I have received a tax invoice. I'm going to verify tax invoice whether this has got IRN or it does not get IRN. Next, e-way bill availability. E-way bill availability for goods purchase if delivery is in the scope of purchaser, compliance under section 155, burden of proof. This is little important. Again, as a company, the lawmaker is very clear with respect to what they want. Now, as a buyer, we need to know what is our scope. Purchases. For case of purchases, where you want input tax credit benefit, section 155 says burden of proof. To give this benefit of input tax credit, you prove that ITC is available. ITC is available. Now, why they have brought in this is to eradicate bogus transactions, bogus or bill trading transactions. To eliminate this bogus transactions, government has brought this particular condition called burden of proof. So to claim input tax credit, I need to have a bill, that is tax invoice. I have to receive goods or services. Then if IRN is applicable, this document should have like a e-invoice. If e-way bill is applicable, then proper e-way bill is required. Then you should have used that particular goods and services for business. Then I should have paid to the vendor within 180 days. Please understand. Now, this is the complaints we do at the end of 11 months, 12 months. What all purchases I do, if I do on monthly basis, well and good. But end of the 12th month, this is our responsibility. So for all those purchases where I have claimed input tax credit, sir, I have a bill. Good. Sir, I have received the goods and services. Good. Sir, this bill has got IRN where it is applicable. Where it is not applicable, it is not required. Availability of e-way bill. Sir, if e-way bill is available, genuine purchase. What if e-way bill is not available? Now depends on nature of business. Like I'll give one example of a construction industry. In case of a construction, we have something called piecemeal supply. Like example, say I want electrical item. Say I have total four floors where the construction is happening. I need say 300 rolls coils of a cable for entire 4 floors. How will I do? First, I'll take for first floor. Second, I'll take for second floor. Third floor. Fourth floor. Like assuming that every floor I need 75 coils. Now, I'll get 10 coils in week 1. I'll get another 20 coils in week 2. Another 30 coils in week 3. Another 15 coils in week 4. Now, this is how it will be spread. Now, entire 75 coils at the month end or at the last supply, bill will be issued. Now, if you look for each coil, now each coil may be value less than 50,000. My value is less than 50,000. But I considered all 75 coils put together, assuming it comes around 80,000. This is more than 50K for e-way bill purpose. So these are the practical cases where, depending on the movement of goods, e-way bill may be there, e-way bill may not be there. Knowledge of my law, knowledge of how transactions happens, track of these documents, and the final bill where there is no e-way bill. Now, these all would be required when there is a GST assessment under Section 65. So as a chartered accountant, as a taxpayer, we need to understand what officer may ask where I want to satisfy the complaints for claiming input tax credit. Then goods and services used for business purpose. Yes, sir. Like I purchased coil, I sold coil. I purchased coil, I have consumed in works contract, I billed for works contract. So it is for business purpose. Payment to vendor within 180 days. Yes, I approve. Then I can claim my input tax credit. These are my compliances which may require for GST audit purpose. Vendor payments, then ITC reversal as per credit note issued by the supplier. Section 34 says that whenever a credit note is given, when supplier reduces his output tax credit, the buyer has to reduce his input tax credit. So there is a requirement of a statement as per Circular 212. So what we need to do at the end of year, since we are in March, credit notes April to March, whatever I have issued, if the value of GST less than 5 lakh, more than 5 lakh. If the value of GST is less than 5 lakh, self-certified statement from the buyer. In case if the value is more than 5 lakh, a chartered accountant to certify. So I, as a buyer, if vendor gives a credit note, he already reduced his output tax. I have to reduce my input tax credit. So if the total value of credit notes is less than 5 lakhs, I'll give a certificate to the vendor. If the value is more than, the GST value is more than 5 lakh, the chartered accountant will give certificate to the supplier. So this is again the credit notes reversal books vis-a-vis the GST portal. So whatever reconciliation I've shown in an Excel file, this is what we need to do for entire 12 months together. Since we are in the month of March, April to February, what credit notes as per tally, as per books, what credit notes are there in to be, if there is a gap, what I have to do in the month of March. Similarly, next we will move on to clause C, which is your external reconciliation, disclosure in GST returns. We are talking about purchases. I have accounted purchases. I did a reconciliation. Now my job to disclose in GST returns. Again, this is what I do end of March. Check for ITC available as per books. Now this is your starting point. Vis-a-vis GSTR 2B. Vis-a-vis GSTR 3B. I'll say starting point. This I'll say starting point. This is source. This is destination. I start with books. I compare with what is there in GSTR 2B. I'll travel to GSTR 3B, what I can avail. Now, this three-way mechanism is where I have mapped here in Excel file. I'll share this Excel file with you also. Look here. From books, this is my starting point. So what is that I have accounted as per books? This is where I travel to GSTR 2B. So as per GST to be, what is the credit available? Now, one level of reconciliation. Based on this, I'm building GSTI 3B. Auto-populated amount in GSTI 3B vis-a-vis derived ITC for GSTI 3B. This is a reconciliation from 2B to 3B. Based on this reconstruction of GSTI 3B, the input tax credit which comes into my GST returns. Now, please keep in mind, this activity, if I do every month, end of 12 months, my life will be easy. If I don't know that I have to do this every month, suddenly if income tax, suddenly if GST is going to ask, explain what is the credit as per books vis-a-vis 2B or vis-a-vis 3B. I have to do and break my head, results into a tension, confusion, and fear. Rather, if I know that this I have to do every month, my life will be easy. So this is a three-way reconciliation where I started as per books. I started as per books. I derived what is there in GST at to be. From this, I've reconstructed, look at this reconstruction of 3B. This is what we have done. So this is one reconciliation I have to do every month. If I have not done every month, at least end of this March, we should do this reconciliation. ITC flow as per GST annual returns versus books to carry forward input tax credit. Now, this is from your annual returns point of view. GSTR 9, 9C. What is the input tax credit I am going to carry forward? You have electronic credit ledger, a reclaimable statement. So this is information 1, this is information 2, this is information 3. Your statutory auditor, that is chartered accountant, the income tax officer, GST officer, they're going to ask you, what is the input tax credit as per books vis-a-vis GST returns? Then ITC reversal. End of year, you're expected to explain. End of the year, what is your ITC reversal on exempt supplies? You have taxable supply, you have exempt supply. Have you reversed your input tax credit? So here, we have this formula, rule 42, rule 43. Actual reversal versus expected reversal. This by end of March, I have to calculate, disclose in April return. Disclose in April return. I have a time limit till September to reverse. If I don't reverse in April, I need to pay interest for this particular exempt supplies. So this is my purchase related reconciliation, where what is expected from books of accounts, what is the external source of information available for reconciliation, what is the disclosure I do in my GST returns. Similar to purchases, sales part. What is that I have to understand from my books of accounts? So whenever I have accounted sales, they ask you, what is your turnover on which you have paid GST? This is taxable activity. Turnover, which is exempted activity, where you are not going to pay GST. What is a notification as per which you have not paid GST? What is a documentary evidence? For every transaction, please keep in mind, you need to have a documentary evidence. Then exempt turnover for the purpose of chapter 5, that is land and building securities. This is only for section 17 purpose, which gets disclosed in GSTR 9 or 3B. Please keep in mind, whenever there is a security, my chapter 5 says that 1% of sale of security is your turnover. 1% of sale of security is turnover. How to calculate input tax reversal on exempt supply? Let's just have a understanding on that. Computation of ITC reversal on exempt activity. So first and foremost, we need to find step 1, total turnover. Step 2, exempt turnover. Step 3, percentage of exempt. Step 4, total ITC. Step 5, common ITC. Step 6, ITC reversal. So this is how I do a calculation. First, I'll calculate what is my total turnover for that particular tax period. Out of that, assuming that I have 20 rupees as exempt turnover for a particular tax period. In step 3, I'll find my percentage of exempt turnover. That is 20 divided by 100. I get 20%. This is where I calculate this exempt turnover. Now I'm giving this for a particular tax period. The same formula we do for entire financial year. First, I do month-wise, the same activity, 12 months again I have to do. This is the expectation as per rule 42. Then step 4, for that particular month, what is my total ITC? This is on your goods, that is, I'll say this way, input, capital goods, input service. On total, what is my input tax credit? Out of this step 4, what is pertaining to common input tax credit? Common for taxable and exempt supply. Now this common ITC, how do I find? Like example, So there is a security common for both taxable, exempted. So there is a auditor consultancy, which is common for both taxable, exempt. So there is a what you call rent charges. So I identify list of common expenses, both for taxable, both for exempt. That quantification, this particular quantification, I do in my step 5. Step 6, I'll say step 5 into step 3. Whatever percentage I have received here, whatever credit I have identified, I'll reverse in this particular step 6. This amount I mark in table 4B1 of GST 3B. This is how I quantify my input tax reversal, which is required. Coming back, sales part. So exempt turnover, then details of stock transfer. This will not be there in my consolidated financial statements. When I have a financial statements, in my consolidated financial statements, this will not be there. So this becomes a reconciliation item in GSTR 9C, table 5. So I need to have chart of accounts. I need to have accounting where one side it's expense, one side it is income. Both gets knocked off in trial balance. So in financial statements, I'll not have. When I file 9C in table 5, I find my stock transfer item. Then supply of work and works contract under construction, that is sale of immobile property. Project specific, I need to have income. Please keep in mind, Shiva, income from works contract, income from sale of immobile property. Now, project specific, what is this taxable turnover? What is the non-taxable, non-GST item? Then other recoveries subject to GST. Like example, say you have freight or you have other recovery. So whatever money you have recovered, which is subject to GST, I have to show in my P&L account. Like example, so there is a registration fee. Any person who comes for a particular event, I collect as a registration. Training fee is separate, registration is separate. Because not that every person who is registered go for training activity. So that registration is not a main income. It's a small income. I may call as a other income. Similarly, miscellaneous income, not subject to GST. Like example, interest from fixed deposit, interest from income tax refund, etc. My source is books of accounts, external reconciliation. So this is where the expectation is from income tax officer, income tax expectation from GST officer, from a chartered accountant who certifies their books of accounts. First and foremost, whatever income you have booked should match with your income as per P&L account and bank statement. This particular income should have match with bank statement. If not, my current asset, sundry debtors. What is that I've sold? What is the money collected in bank account? What is money due as sundry debtors? Similarly, the information which is available in income tax, Form 26A. Under service tax, we have seen many cases where, based on the IT return, we got a notice under service tax. Then TDS, TCS under section 51, 52. Like when I do works for BBMP, BDA, or any public sector undertakings, they deduct TDS. Now, this information will be called for matching my turnover for 12 months. So all 12 months data, I have to verify. Now, this is a crucial where I download every month this form TDS credit. My turnover as per form 3B, both should match. If not matching, I need to prepare a reconciliation statement and keep it ready to explain to the GST officer. Disclosure in GST returns. Now here, my sales, whatever I have shown, what is the turnover? Along with this turnover, what are the credit notes I have adjusted? What are the credit notes I have adjusted? So what happens if I have not accounted for credit notes? I have Excel file. I'll explain that. So this is your net turnover reported. If at all credit notes are there, April to February, I forgot to disclose April to February, please report that in March so that your turnover gets adjusted. So what if I don't have a turnover to adjust? Then there is a circular in 2023. I don't remember the number. You file a refund application. Whatever tax you have already paid, claim that as a refund on account of credit note. Then disclosure of exempted turnover. I forgot to disclose exempted turnover. Now I have to understand where to report, how to report. Details of advances. Now in GST returns, please keep in mind, along with your income P&L account, money received in advance, whether I have disclosed, whether I have adjusted. Reporting of turnover under proper head, that is B2C, B2B, SCZ, deemed exports, zero rated supply, scheduled 3 transactions, exempt supply. This information, please keep in mind, design the chart of accounts from income tax, from GST, from your financial statements reporting point of view. If I have labeled the chart of accounts properly, this becomes easier. My job becomes easier. If I've put everything under turnover, local sales, export sales, I'll not get to know. Local sale, B2C, local sale, B2B, local sale, SCZ, local sale, deemed export. I don't get to know. So better to have your chart of accounts, because when we file when we consolidate financial statements and give to a chartered accountant or give it to the GST officer, we should not struggle. Rather, since we are filing annual returns, we are giving data to various agencies, design your chart of accounts properly. Now from here, we'll move on to few items which are there in my annual plan, what we need to do. So we have reached March. So what all activities are there which I need to keep in mind? So I've just, I'll share this Excel file with all of you. I'll just hide this. Most of this we would have discussed, but again, we will try to understand. Reconciliation activity. Closing balance of input tax credit as per books vis-a-vis your GST portal. Reconciliation activity, input tax credit. So my books shows, now assuming my books shows 30,000 as input tax credit. But in GST portal, electronic credit ledger, I have 2 lakhs. This is where even the GST officer will be worried. See, you have accounted 30,000 in your balance sheet. But in the GST portal, you have 2 lakhs as a balance. How is it possible? Without accounting in the books, you took the credit. That is what the opinion the GST officer will be getting. So my point is, always try to match the closing balance as per books vis-a-vis electronic credit ledger. Then Rule 36 with Rule 48, declaration from supplier who have not issued or liable to issue e-invoice. I say no, when I download 2B, where IRN is not available, you check with your vendor why they have not provided IRN. Get a letter so that it will help you to explain. Then LUT. For exports, supplies to SCZ, please obtain a letter of undertaking on the GST portal. This is a free of activity which is easy to generate. Then accounting point of view, credit notes. Identify the credit notes to be issued, if any, for the price revision as per books. So whatever sale I have made, customer, like example, I sold goods for 1 lakh. Customer made a payment of 85,000. 15,000, there is a decrease in value. Why? Customer says that there is a deficiency in your material, deficiency in service. So that 15,000, because I received short, customer is not willing to pay. Issue a credit note under 34, report that particular credit note to reduce your taxable value. Don't do between the financial years. Try to use March as a crucial for this adjustment. Revenue recognition. Any debit notes to be issued for the price revision for the orders. Sir, I supplied the goods. My customer said that there is a price adjustment to be done where instead of 22 rupees, I have to bill for 25 rupees. There is a 3 rupees gap. We have to issue a debit note. Before March, please issue the debit note. Then 16 to provision, payment to suppliers. March is very crucial. April to November, we have crossed this 180 days period. So as on February, are there any vendor payments where ITC was availed but not paid? Please reverse that input tax credit in the month of March. Where do I reverse? You can use 4B2 of GSTR 3B. So in case if I have not paid to my supplier within 180 days, reverse that input tax credit in this particular table. Then issuance of a tax invoice, debit note, credit note having a unique series. So from 1st April, start a fresh tax invoice number, debit note number, credit note number. Now, usually people have a tendency. When I've ended 31st March, my tax invoice, say 385. People say 386, I'll start from 1st April. I would say no. Rule 46 clearly says that unique sequence number for every financial year. So start from 1. Then job work, section 16, 19 read with section 143, job work. Any material you have given for job work, this should have received back within 1 year. So as on 31st March, you have to check whether delivery challan issued but not received back. If not received back, I have to reverse the input tax credit. Not only that, there is a GST return called ITC 04. If your turnover is more than 10 crore, April to September 1 return, October to March 1 return. If turnover is less than 10 crore, ITC 04, 1 return every year. So based on the delivery challans you have issued. Then reconciliation 1 versus 3B. If any debit note, credit notes, amendments, etc. are to be done, use March window for doing the correction. Then reconciliation of inter-unit transaction, schedule 1. From one state to another state, when I have given a bill, whether the other state have accounted, whether they have claimed the input tax credit, do a reconciliation activity. Reconciliation of reverse charge, list of expenses on which reverse charge is payable, whether I have paid reverse charge. Can I claim input tax credit? Whether I have claimed input tax credit. Reason, even GST department is giving notices under Rule 88D. If there is a gap between input tax credit paid, input tax credit availed, please have a reconciliation. Then I have explained credit notes, more than 5 lakhs, chartered accountant certificate, less than 5 lakhs, self-certified. ITC availment pending, which again imports case I have explained. This also imports case I have explained. This is a new complaints, Rule 37A. My vendor filed GSTR to B, but he failed to file GSTR 3B. So where do I get this? When I download GSTR to B, I'll get to know whether 3B was filed or not. So April to November, any supplier who have filed GSTR 1, the input tax traveled to GSTR 2B, but he didn't file 3B. Reverse the input tax credit now itself. Now, turnover reconciliation, books with the income tax portal, with the TDS, TCS, with the no other source, bank statement. Try to have a proper reconciliation of a revenue. Any revenue not shown, bring it in your March return. So these are the activities which I do end of this March. Then unrectifiable issues. Like in the reconciliation, you come across. So credit notes I have accounted in books but not shown in GSTR 3B. March 26, make a disclosure. If not, claim refund. That means to say, sir, I have issued tax invoice. After 2 months, I issued a credit note. This credit note came in GSTR 1, but not in 3B. Why not 3B? Sir, I should have a turnover to adjust. I don't have a turnover. So when I don't have a turnover, as per as GST circular, I can claim a refund for that GST paid. ITC available but not availed. Now you have a time limit as per section 16 till 30th November of next financial year. My recommendation, quantify the ITC and park in table 4B2 of GSTR 3B. So whatever input tax credit, it is there. I have to account and I have to avail. Account and avail in table 4B2. Whenever you are confident, bring it back in table 4A5. To avail, mention this credit in table 4A5 and 4D1 of subsequent tax period. This is as per Circular 170. ITD is disclosed as ineligible erroneously. I have to take the input tax credit. By mistake, I have shown as ineligible. File a refund application to justify. Non-availability of LUT, make a letter to the jurisdictional office for condonation. There is a circular that procedural lapses cannot be denied for export benefits. Failure to charge GST on a particular supply, this pay in March 26 or subsequent GST returns. ITC availed without accounting for the inward supply, reverse the ITC with interest. I have availed but not accounted. ITC short reversed or non reversal. Again, reverse the ITC with interest. Turnover on non-GST, turnover not considered. Pay the ITC, pay the tax with interest. So these are a couple of mistakes when I do reconciliation, I come across with respect to output tax, with respect to input tax credit, right? And I just gave one checklist over here, like example for exports. So when I do exports, what I do, like, do we have a LUT, whether compliance as per section 2 of IGST Act, that is place of supply should be outside India, service recipient outside India, money received in convertible foreign currency. Evidence for that, I have a FIRC. I have a master service agreement for the services export valuation. Whether I complied with section 15, read with rule 28, whether valuation is proper, which column I have disclosed, like in GSTR 1, table 6A, in GSTR 3B, 3B, 1B or 31C, where I have to disclose. So this is a simple checklist which I have prepared with respect to your compliances. So friends, we are at 1